Hello and a very warm welcome. This guide comes to you from the experts at My Tax Accountant. We're here in November 2025, and the world of UK tax is going through a massive shift. So let's get right into it.
So let me ask you a question. What if, for your next tax return, HMRC already knew precisely what you'd earned before you even typed a single number? Well, for millions of us here in the UK, that's no longer a what if. It is the new reality. And understanding these new rules is absolutely vital.
You see, for decades, the tax system was pretty straightforward. You earned your money, and then you told HMRC about it. It was a system built largely on trust and self-reporting. But that's the old way. We are now in a completely new era. The whole model has been flipped on its head. Instead of you telling them, HMRC is now finding your income first using powerful data and proactive matching. To really see how this plays out in the real world, let's talk about Sarah. She's a freelance graphic designer in London. Like so many people today, her finances aren't just one simple salary. She's got her main freelance income, a great little side hustle selling prints on Etsy, and she's even dipped her toes into crypto. Her story is the perfect way to understand how this new data-driven world works.
So, how on earth does HMRC know all of this stuff about Sarah? What's their secret? Well, the answer lies in one incredibly powerful piece of technology. It's called Connect. And honestly, you can think of it as HMRC's digital super detective. It was developed by PAYE Systems, and its one job is to connect the dots. It tirelessly sifts through literally billions of pieces of data, constantly looking for any little mismatch between the financial footprints you leave and what you've actually declared on your tax return.
And just look at the sheer scale of information this thing chews through. It's not just your bank account, not by a long shot. We're talking everything from your credit card spending to what you sell on eBay or Vinted to your Airbnb bookings. It even pulls data from the DVLA, the land registry, and gets information shared from over 60 other countries. It is a vast, interconnected web of your entire financial life.
So, the big question is, does it work? Well, the numbers speak for themselves. In the 2024-25 tax year alone, Connect was responsible for identifying an absolutely astonishing £4.6 billion in additional tax revenue. It's incredibly effective, and it's a core part of HMRC's strategy now.
Right, let's get into the nitty-gritty. Let's follow the money trail and see exactly where this data comes from. And seriously, stay with me on this next part, because if you sell anything online, this might just surprise you.
Okay, let's go back to Sarah and her Etsy shop. In the past, a little side hustle like that might have, well, let's just say it could have flown under the radar. But those days are well and truly over, all thanks to new global reporting rules that have completely changed the game.
And here's the crucial change. Under new rules that came into force back in January 2024, digital platforms like Etsy, eBay, and Airbnb are now legally required to report their sellers' earnings directly to HMRC. This means as soon as Sarah makes over £1,000 from her prints, Etsy has to automatically send her sales data straight to the taxman. HMRC doesn't even need to ask anymore.
And it's not just the online marketplaces. Sarah's small crypto portfolio is also about to become much more visible to HMRC. Let's see how this is shaping up in the world of digital assets.
A new global standard called the Crypto Asset Reporting Framework, or CARF for short, is coming. As you can see from this timeline, starting in January 2026, crypto exchanges in the UK will have to start collecting detailed data on all their UK users. Then, in May 2027, the first big report covering all of 2026's transactions will land directly on HMRC's desk.
Now, what's really key here is the level of detail we're talking about. This isn't just a high-level summary. The platforms will be reporting your full name, address, date of birth, your NI number, and comprehensive details of every single transaction, every sale, every swap. It paints a complete financial picture, making it almost impossible not to declare it.
So, HMRC is busy gathering all this data from all these different places. What happens when they find something that doesn't quite add up? Well, this is where it gets very real, very fast for taxpayers.
When the Connect system spots a mismatch, they don't usually start with a heavy-handed investigation. Instead, you're likely to get one of these in the post. It's called a nudge letter. It's basically a polite but very firm tap on the shoulder from the taxman, saying, "Ahem, we've got some information here that doesn't seem to match your tax return. Perhaps you'd like to take another look."
And don't for a second think these are rare. The number of these letters being sent out is just exploding. In the 2024-25 tax year, around 65,000 nudge letters were sent out. That tells you one thing very clearly. HMRC is incredibly confident in the data it holds.
So, if a letter like this lands on your doormat, what should you do? Well, here are the crucial steps. First and foremost, do not ignore it. This isn't a random fishing trip. It means they have specific data about you. The next step is to carefully review all your records for that tax year, figure out what you owe, and then make a formal, voluntary disclosure. And honestly, the fifth step is key. Get some professional advice to make sure you do it right.
Okay, so with HMRC armed with these new data superpowers, what's the absolute best strategy to keep your tax affairs in perfect order and stay ahead of the curve? One thing that's really important to understand is how far back HMRC can look into your affairs. Now, it all depends on your behavior. If you just made a genuine mistake, even though you were trying to be careful, they can usually go back 4 years. If it was a careless error, it's 6 years. But, and this is the one to really pay attention to, if they think you deliberately hid income, HMRC can investigate as far back as 20 years.
And that leads us to probably the single most important piece of advice in this entire guide. Here's a pro tip for you. It is always, and I mean always, better to tell HMRC about a mistake before they find it themselves. Making a voluntary disclosure shows you're taking responsibility, and it can often lead to significantly lower penalties. Being proactive is your best defense.
Now, to get things right, you need to know the numbers. So here's a quick summary of the income tax rates and bands for the 2025-26 tax year. Remember, that first chunk of your income, up to £12,570, is your personal allowance. That's all tax-free. After that, you start paying the basic rate of 20% and then move into the higher and additional rate bands as your income goes up.
Phew, we've covered a lot of ground, haven't we? We've seen how technology has completely transformed UK tax compliance. I think the big takeaway is that HMRC's ability to see your complete financial picture is now greater than it has ever been before.
Now, before we finish, a very important point. Everything we've talked about today is for general guidance only. Tax can be really complex, and everyone's situation is unique. So please, do not rely on this information exclusively when you're making financial decisions.
So, if you're feeling a bit unsure about any of this, or you've received one of those nudge letters, or you just want the peace of mind that you are fully compliant, the absolute best course of action is to speak with a professional. The team at My Tax Accountant are ready to give you expert help. You can call them on 0208 570 8531 or drop them an email at info@mytaxaccountant.co.uk. And of course, don't forget to subscribe to their YouTube channel for more updates like this.
Your digital life is now an open book to the tax man. The only question is, are you ready for your next chapter? Thanks so much for watching.